If you've been asking what is the best commercial real estate asset to invest in, you're asking the wrong question. Because let's face it, office spaces is not dead, retail is not dying, and multifamily is not always safe. And I'll prove it to you in this one quick video. My team's done $1.6 billion in transactions over the past few years, and I'm going to show you the pros and cons to the big four of commercial real estate assets to invest in or not to invest in, because at the end of the day, they all can make you rich and they all can bankrupt you like none other. Now, I'm going to show you exactly what to expect on each category, pros and cons, and also what the best one is for you and your investments at the end of this video. So make sure you take the end of that. The first on the list is office spaces. Right now, you probably look on the news. Office has took a massive hits. But the amazing thing about commercial real estate, it's all about creativity. If you find a way to be creative, offices could actually be the best asset class on the list. All day, more on that pretty soon. But for a face value, these deals are like the diamonds in the rough. You can buy them for 20, 30, 50, 70% below market value, which makes them incredibly valuable. Now, obviously, you can zone them, turn them into condos, turn them into party zones, networking areas. There are ways to do it. Now, what I like about office spaces is you have high level tenants. That is one of the best pros to having office spaces. High level tenants. You're talking to Googles and Apples, office spaces, talking to people who are executives, big businesses who can afford a 10, 15, 20-year lease. So another big point too is long leases. It makes them amazing assets for yourself. I think they're incredibly powerful. And then, of course, right now, you can buy them on pennies on the dollars, which makes them even more of a great investment for you if you're creative. Now, obviously, there are some drawbacks. If you're investing in a place that has, only people working there or work from home people, may not be the best. But can you find ways to get people in there? Absolutely. I even go as far as to say you can even add in your lease agreement saying, hey, I will not close on this property if I cannot find tenants for it first. That alone can give you a huge lift of your upside potential of 5, 6, 7 plus figures sometimes of true value of your office space. Now, keep that in mind, though. Also, you gotta keep in mind as well, is it in the city, out of the city? Those make a big difference for you, too. So, again, offices can make you incredibly wealthy. It has made many millionaires and billionaires even in all space. But at the same time, it also can bankrupt you as well if you know what you're doing. Now, I'm making this super engaging video. So let's actually look at office spaces right now inside of Crexy. So pop up my computer screen. That way we can go back and forth from the trusty whiteboard back to our amazing screen share. So let's say I'm here in Austin, Texas, but we can help you in all 50 states and 25 different countries, but mostly just America is our main focus for you all. If you want help as well, down below, link in the description, have a call me directly. I can help you get the best deals. If I don't save you these 5 or 6 figures, you pay us nothing. So it's a win-win for you. And no obligations for that one. But let's do office spaces. What's nice, you have medical, creative, you have high income people in these areas. There's over about 4,000 opportunities just in Texas alone. Let's do unpriced because I want to see price tags up front. And let's even do, cap rate, 7%. Let's beat inflation. Or at least try to. Now we have, 145 options. This is a plasma center, 7.5% cap rate. Here's a 14% cap rate. U.S. Department of Veterans Affairs. they can probably pay the rents. Again, you have higher level people in these areas. It is a $473,000 a year NOI. Single tenant makes it super easy for you. As long as you don't leave, you're pretty safe. 100% occupied. Not sure what the lease terms are. Let's see. 2020 census. Is a land covered opportunity. For this one, it's a little bit more risky. But again, I want something super stable. What's nice about office spaces, it's kind of like stable income. Like you're just holding on to it for the long haul. 500 days on market makes me kind of worried on that point too. Here's the photos, total, sell, rent, operating costs. Here's kind of the performer for us. It's operating. So they actually don't tell us the lease terms, which is a little odd. Unless this one uses 3 years, which is an option. But again, this is a good kind of option. At least term, yep, 3 years. Actually, not even 18 months. All right, total 3 year left. Okay, so this one's pretty short. Obviously, you can pick and choose. You want to have a short one for that. But this gives a really good example of what we can kind of see. This is an 8.9% cap rate. Again, I think this is medical. It's triple net, which also makes it nice about having all breakdown. Main term is 3.5 years, kind of risky. I'd probably ask to find out if they're open to extending before I even close on this property. So they have at least options, 2 5-year options. But I like, office spaces because they're triple net a lot of times, depending on where you're buying at. And also they'll have high cap rates, safe investments. And of course, there are places that are different. So if I'm like looking at a place here in Austin, down at the Sailboat Tower, Google left that place. Who knows if that's going to be an easy place for us to return. But also, you have massive, massive value. This is $32 million. This is here 2.5% cap rate. So this is Buda and Cedar Park. Not quite sure why it has Austin up there because it's not the same place. But, good example to kind of see the ranges, though. You can find massive, massive terms. This is 18 years remaining. It is a high cap rate, 8%. So you see, like, you can, to me, what matters most, like, the deal makes sense. And more appreciation. This is office spaces, obviously. So we have those. And of course, you have small ones that are like probably in the middle of nowhere. That are like this. But if you can find tenants, it makes it a good investment. So those are office spaces. So then I understand office spaces are a more intimate level. I think offices are great, especially right now, if you are able to, you have a lot of capital, you want something super safe, and you're experienced, you understand how to, re-tenant locations. Offices are good. Or caveat, if you're super creative, it's also good then too. Now, if you're brand new, trying to tap into commercial real estate, office spaces may not be your best bet, at least not on a large scale. If you're doing like single tenant, maybe 2-3 tenants, and it is a small investment, yeah, I think it's pretty solid. Like you can definitely make a lot of money in office spaces because people need places to work still. Even some places need places to have like a sale for themselves to have a place there for tax purposes. So offices are there. So they're not dead. Obviously, we just saw amazing deals happening right now. Are some offices dead? Of course. But are some storage units dead? Of course. Are some multifamily dead? Of course. You can find dead deals anywhere in any kind of asset classes. And also for those watching right now, like, hey, this is the big four, but how is it way more than that? You're right. There are a lot more subcategories and main categories even when it comes to commercial real estate. Up above, a whole video that breaks down for you all different classes for you, A to Z and more for more context there. But I'm going to do the big four for this one. But yeah, special purposes, there's kind of hotels and storage units and RV parks. There's other kind of multifamily down below. but there are a lot of subcategories as well built into all of these. Now, retail, I think, is super nice. A lot of these are triple net. And the big thing coming to retail is where are you investing at and who are the tenants? That is the most important thing. Like anything as well, for multifamily, industrial, and offices, who's staying there? If I'm leasing to a Starbucks or to a Dollar General, I probably have a pretty good return. I know they can afford their rent every single month. This is all I care about, and hopefully you too, in terms of cash flow and appreciation. Now, appreciation is high for offices too. Like if you're buying like downtown Austin, if you wait 5-10 years for your exit strategy, you will have a huge lift in appreciation and debt pay down thanks to your tenants. Same for retail. Triple net, as you already know, if you don't know, a whole video up above that breaks that out for you too. And super simply, it's like they pay for our taxes, they pay for the CAM, which is the maintenance on the area, they pay for the insurance, and they pay you rent. They're pretty much, in theory, paying for everything for you, minus major things on this property, and of course the down payment and those closing costs. But retail is great. I think if you're investing in a small city, retail could hurt you a lot. Obviously, if you're like, okay, no one's coming here, there's bad traffic, not close to things, that could be a really terrible investment. But it's like, hey, I'm like in the outskirts or not in outskirts from downtown or in a good location, and I know the business is doing well. I've seen the financial report for them, and so it's happening. Great investment. Like you can find amazing deals in retail. And obviously, if you're a brand new investor, I think honestly, retail and industrial, more of that soon, are probably your best bets. But let's kind of break down retail. So, let's do retail. And you see, you have banks, convenience stores, QSR is also really good too. I think fast food is a great investment. More often than not, most fast food companies don't go out of businesses. Now, restaurants and bars, a little iffy. Like you need to be careful who you lease to. I personally probably will not do a bar. I'll probably not do a storefront. Shopping centers, if it's an anchor unit, this be a good possibility. Auto shops, probably not. It's probably going to be like a level entrepreneur doing his own thing. Done with this one. Let's see. Pharmacy, drug, probably pretty stable. Grocery store, again, if it's a big outlet, also stable. Gas stations, also stable. Daycare, nursery, probably not. Convenience store, probably a pretty good investment. Bank, definitely trust them as well. And now I've nailed down my list. I have 226 options on this one single asset class. And they range from, $1 million to millions of dollars and some even less. But this is a Dollar Tree, 7.75% cap rate, day one. This coffee place, probably will not do that one. Let's see, a site place here. I'm trying to find, big brands. For the gas station, 7-Eleven is leasehold. A little bit different there. This one is a multi-tenant place. Another big multi-tenant place. This is a Fairmeadow Shopping Center. Now, I will add some context to you. More often than not, at this level, for those who are like, wow, $13 million, this is mostly like industrial investors. Like my clients we work with a lot, or family offices as well. And family offices, to them, they want to buy this place and hold it for as long as they can. It's like a new bank account for them. Okay, I make 8% per year. It's not crazy high, but it's high enough that I can just buy and hold and then make this now my new way to grow my income. And as long as there's some pretty good stores in here, it makes it safe. You got Popeyes, you have some other places, AutoZone parts. You have some anchor tenants for you. You have DG Market, CVS. It's a pretty good one then too. It's a leasehold. We have Kohl's. Kohl's is a good one. It's going to be, more or less. Kohl's can be a good one. Obviously, in the online shopping came before, a lot of malls went out of businesses, so I keep that in mind too. But like a Dollar General, Triple Net, gas station, Family Dollar, 8% cap rate, All these deals can be good. Obviously, you want to look on the market, do a whole underwriting research, see what's close by. Is it a small city or big city? That still affects it. But, there is a massive, massive brand doesn't always mean and it can always be a big business. I used to live in a city, kind of quick story for you, called Lawton, Kansas. It's like 1,000 people population. No one lives there. Another dollar store in that town for like many, many years. And when I was there, it went out of business while I was there. So like even big brands can go out of business too, which is why like Internet's amazing. You have to still be careful. Like it still is investment. Like anything's risky. So it's just take like this as face value. And again, this one looks like it's kind of in the middle of nowhere. Like I probably would not buy this place because based on the photos, not a whole lot nearby. I want to find a place that is populated and that has a strong, strong business flow. So let's see if this place. Here we go. This one looks more stable. This is on like a major street inside the city. Had a lot of houses nearby, close to a lot of major stores, McDonald's, and stuff like that. Another thing to think about: if you look at like McDonald's, Chick-fil-A, Starbucks, all these stores, they have a whole team of analysts that actually would go in here and do research and see, is this a good market? Is this a good street corner? And that tells me, okay, if they did research to do this, I'm probably safe to buy this place too. And same for Dollar General. They also probably, did some research, picked this location out, and it was good for them. Now, another caveat about retail to keep in mind is if you do massive, massive changes to the site, that can also be a red flag for you too. Like Dollar General is just shopping hours. Like those business probably won't disrupt the store. But it's like, oh, I'm a retail place, but I want to do a coffee shop. I have to reconfigure the whole store. Then probably not. That means moving forward, all your new tenants are now coffee shop people too, unless you get paid to take them down, which you don't want to do. So I think it's super, super important to know who you're leasing to and the long-term effects of these strategies. Again, real estate, especially commercial real estate, is a long-term game, long-term thinking. So that's retail. So retail right there, super quickly, we found some good options, high cap rates, stable returns, and that is a dying market. Now, of course, if you're like buying like Buda, Texas, and it's retail, and that market's taking a hit, it's not right now, but like if it was, then it's probably a bad place to invest your money in. And you can't predict things like COVID from happening, but that kind of stuff can happen. But of course, retail is great. Triple net's probably the biggest reason here, and it's also overall relatively safe, depending on how you invest into it. Our next one, industrial. Industrial, I think, honestly, in the next 5-10 years, will be the new sexy thing in the market. Like right now, if you look at mostly multifamily and storage units, those are the sexiest things on the marketplace because we have investors out there and gurus who are making these popular. There's masterminds, there's courses, there's videos, all these things about mailbox money, lavish lifestyle, and living the rich life of financial freedom. We're talking about these asset classes. And right now, industrial is boring, which is why it works so well, especially right now before the huge wave of people buying them. Now, another fun fact about all these things too is that if you go back far enough and you read books by like William Yeckendorf or Sam Zell, you will see almost everybody have waves of talking about the asset classes. This comes and goes. And for a while, it will shift from retail to industrial to office, from office to multifamily to storage units to RV parks and so forth. That's just the name of the game. So like, don't let the big four confuse you on what to invest in. Industrial is great because it's simple. So if you're a brand new commercial real estate investor, this is probably one of the best deals to do first. It's normally 1, 2, 3, 4 units or tenants in there. It could be docking bay. It can be a holding space for manufacturing companies and so forth. Those make them really, really good. They can also be triple net sometimes as well. depending on who you lease to in those places. Right now, it's unpopular or unsexy, I guess I would say. It makes it sexy, in my opinion, because no one's talking about them yet. At least not a whole lot. There are some gurus out there who do talk about these, but not a whole wave yet as the other ones. And then, of course, on top of that, it's a big range. Big range for income. So you can do it for a low amount of money to a high dollar amount of money as well, and have that kind of there for you. Let's go off this. Don't want retail. And let's look at industrial. Again, distribution centers, flex centers, warehouses, R&D, manufacturing, and then refrigeration for cold and storage. And they're all literally over 133 options just in Texas. So again, I'm finding about the same amount of opportunities on all of these. $13 million, $1.6 million, 7.5% cap rate day one, 8.3% cap rate day one. This is a 9.6% cap rate. Looks like it needs some help though, so I'm probably not the best one for you to do. 9% cap rate, brand new A-class buildings. This was also pretty good. It's in Midland, Texas. Not too bad of an area. Here's another one. This is a Park City Drilling. I like these kind of companies because we know they're normally they do contract work. They're pretty stable and pretty safe. 8.9 years returns left, triple net, occupied, 8.5% cap rate, NOI is $275 for $3.2 million. This is higher than some storage units. And also, what's nice about this one is that it's just dirt. It's like not a lot going on. Maintenance is pretty easy, so they didn't need, OpEx or, CAM. Pretty easy to deal with. And then we have a whole breakdown, again, minimum for you, this roofing structure. Again, this building looks like it's pretty new overall and probably won't have a whole lot of stuff going on for a while. And also, the caveat too is like their main thing is like the equipment. They don't really care as much about the building as well either. Let's see the road. This is a big one. Like, is it in a location that makes it easy to do pickups for themselves and move their stuff around? That's gonna make a big difference for us. So it's off a side road. Here's the main road on interest I-20. So again, I like that. I can just maybe just turn off on it. So be over here, turn off, and then go down. So next point. And there we go. Super, super easy. Next to airport 2. High appreciation rate probably on this one. And we're almost in the center of town of Midland. So again, I found a good deal. Face value, super easily. And of course, there's all negotiations. Like, hey, I'm worried about X, Y, and Z. Give it to me for $3 million even. That's a big possibility. I saved my clients this week alone over $500,000 across 2 clients alone. So 2 of my clients combined over $500,000. Each of them saved $250 and one saved $290 on next deal with us helping them. Again, you want help with me as well, helping you get the best transactions, sourcing deals, doing the whole 9 yards for you, and saving you these 5-6 figures. Down below, call me directly. No obligations, no strings attached. But if I don't help you at least make more money than my commission would be normally, I work for free. If my goal help you save these 5-6 figures, guaranteed with all help. And down below, have that access for yourself. I know this can seem overwhelming if you've never done this before. Again, this is how you look at it though. So right now, I just found a great deal for a industrial area. I think it's super, super nice for those who are brand new into commercial real estate investing. But honestly, all 3 of these, especially these 3, are so similar to each other. It's kind of the same exact thing. Like I'm leasing the triple net a lot of times to a corporation, to a business, also corporation. And of course, this one's a little more, unique. Because it could be people like packaging deals or people who have docks and stuff like that. That makes a big difference for us too. And then multifamily. Multifamily, as it sounds, is a easiest asset class out there because it's so simple. It's so familiar. That's probably the best way to say it, is familiar. If you understand single-family houses, you understand multifamily. There's just more units, more doors, more things going on. I think that multifamily is one of my favorite classes. There are great deals out there, but you also can overspend for these two, and they're harder to find because there's so many people out there. Also, another thing too about multifamily is nice. It's bank friendly. Banks like multifamily. They understand that. Like, if I'm doing like storage units, a lot of times they're like, "Oh, this is not the safest bet. It's more risky. I'm gonna have a less amount of lease terms. It also kills my cash flow, my NOI." If I'm doing like office spaces right now, offices, banks probably don't like offices right now. Makes it a little bit harder to do. If you're doing retail, industrial, banks are probably pretty okay with them, but multifamily, they understand that so well. It's just people dependent. Makes it really, really easy for us. Also with multifamily too, is that it really comes down to what are you looking for in terms of the asset. So all of these, each one of them, we have, A to D. Each of these have subclasses that can make a break it for us too. If I'm buying an office space that's class D, it's probably gonna be a bad deal, a lot of work. But also, if my class D or C or B, my cap rate is higher. Like for those who are industrial family offices watching this, first off, thanks for being here. But I would say you're probably buying class A's because it's just stable, turnkey ready, no management, no anything like that. And then at that point, almost all of these are safe because there's no like risk for the most part. And obviously, if something happens to the market, that could be a risk. But overall, they're pretty safe investments. Some of these places have been around for 20, 40, 50, 100 plus years, still standing. And you need to do upgrades along the way. So all these make a massive difference for us. Let's look at multifamily on our board here, kind of see what that looks like. So check off industrial, multifamily. Again, multifamily, kind of RV parks in a way. For polios, not for this case. Student housing, that's fine. And of course, apartment complexes, also good. RV parks, storage units are mostly land plays. They're all great cash cows for us too, for cash flow. But I want to look at like pure, multifamily opportunities. I don't want packages or something super close to each other. This is a mixed use. This is a combination of doing office or retail and also multifamily. Here's the multifamily one, 16 units. This is a NOI of 165, so 7.5% cap rate. Again, actually lower than we saw for offices and for retail and for the industrial. This is the lowest we've seen so far across the board on all three different strategies. This is 7.5% cap rate. This is 48 units. Let's see this one. 8% cap rate. Here we go. This is a higher cap rate. I wonder if they had any delayed maintenance going on here. Looks pretty upkept though. What is it? Class C? Okay, so Class C will have some obviously upgrading you need to do for this property. But again, we just found a good opportunity super quickly. Obviously, a lot of days on market, probably due to some kind of thing going on with the property, location, and so forth. So you do underwriting. And of course, also know your expenses. Like up above, I have a whole video that breaks down as well all things expenses for multifamily for you too, for more context on that one. Preoccupied though. But again, we can find good and bad deals in any asset classes. And to really, really paint a picture for you and like take this all home for us, I want to look at one super simple truth. If you have not done so already, you can scroll back a little bit, take a picture of this picture here for you, so you have that for yourself. But I want to make one super solid point. The way to look at properties is two fronts on assets. So bad deal plus, pick this up, plus great with an amazing asset equals bad deal. So honestly, it's simply one simple concept. A bad deal plus an amazing asset is still a bad deal. Doesn't matter if it is a industrial building, if it is a storage unit, if it's a hotel, multifamily, does not matter. A bad deal is always a bad deal, despite the asset class. Now, if I go a step further, though, and I have a great deal plus any asset, that equals opportunity. I don't want to say great deal, but you never know. You never know after you buy it. 100%. Things can change. But I do know a great deal in any asset, doesn't matter what it is opportunity. A bad deal plus an amazing asset, or honestly, any asset, is also a bad deal. So honestly, just flip these together, amazing or any, same exact thing. Because we now know there's no such thing as a great asset versus another asset. They're all the same. They all make you money, build you wealth, create generational legacy for you and your family. They all can do that for you. The main four and the subcategories are about the same. What really comes down to is, why are you investing? That is the number one thing to always ask yourself. So I go a little further on this one. There's a couple questions to ask yourself. One is why? Is it appreciation? Is it taxes? Is it cash flow? Why am I investing in the first place? If I know this answer, that helps me determine what to invest in. Should I invest in multifamily? Should I invest in banks? Should I invest in retail or office spaces? You name it, this will tell me what to do. So I know my why, the what becomes super easy to pinpoint. Next one is, what is the exit strategy? Two, so exit. Is my goal to exit in the first place? I'm gonna hold it for 5 years. Am I doing syndication? What my capital stack looks like? All these things help me understand at a deeper level on what I'm gonna be doing for my investment. Because if I have an exit strategy, then now it does matter what I'm doing. If I'm trying to exit in 3 to 5 years for whatever reason it might be, and me knowing that buying an office space that is hard to tear down and exit on, have a massive tenant in there, can help me determine what to do instead. So really understand what is the exit strategy behind what you're doing, give you a really good understanding of that next link for you. And then of course the last one I'm going to do for us is the most important one. Is it a great deal? Honestly, these three questions, what's the why, what's the exit, what is the great deal, you can't really fail. And I think a lot of people will overcomplicate investing and commercial real estate investing because they want to sell you a program. They want to sell you a mastermind, a course, or a book. So it's not seem complicated. It's not one direct source that they also, populate and talk about. Well, then that's probably why it's happening. I have a lot of friends who are in those spaces. I'm not saying they're bad or wrong. I'm a real estate broker. My goal is to help you sell and buy commercial real estate. So I have nothing to sell you other than assets. This is why I'm a fiduciary. I have no privy on what you invest in, along with me, hopefully, because I want you to just have a safe investment. So is it a great deal or is this popular? That's a really, really important thing to ask yourself. Am I buying this thing because someone said I should buy this thing, or am I buying it because I think it's actually a strong investment? If you know those answers to yourself, it makes your whole life easier. And down below, I'm curious to know if you're watching this whole video, what is your favorite? Let me know in the comment description. What is your favorite asset class to invest in and why? And does this change your thought process on what you should do with your money now moving forward? And of course, over here, a whole breakdown A to Z of investing in commercial real estate and a whole playlist for you as well for all things commercial real estate. And of course, we want extra help and support down below, link in the description, call me directly. It'll be the best deals, at least 5-6 figures of all help and support anywhere across America. But as always, thanks for watching. Hit the like button, subscribe, tag your friends, give us a share. I'll see you at the top. Thanks for being here.